All right, let's get right into it. Today, we're breaking down one of the most unbelievable corporate crises in modern aviation history, the story of the Boeing 737 MAX. This is a story about cutting-edge technology, terrible deception, and a price tag so high it's almost hard to comprehend. And let's just start with that price tag. The total estimated cost of the 737 MAX crisis is a staggering $80 billion. Now, that's not just a fine or a single settlement. It's a number so massive that it tells a story of a complete systemic failure, one that would send shockwaves across the entire globe. So, how in the world does a crisis rack up a bill that big? Well, you've got to look at the breakdown. The direct costs, things like fines and settlements, they were huge, about $20 billion. But the real long-term damage, the thing that truly crippled the company, came from the indirect costs. We're talking $60 billion in lost sales, a completely shattered reputation, and the massive discounts Boeing was forced to offer just to convince airlines to trust them again. But before we go any deeper into the money, we have to talk about the real cost, the one that can't be measured in dollars at all. We have to talk about the human cost. This right here, this is the most important number in this entire story. 346. That's how many passengers and crew members lost their lives in the crashes of Lion Air Flight 610 and Ethiopian Airlines Flight 302. And you have to understand, according to the Department of Justice, these weren't just tragic accidents. This quote from the DOJ gets right to the heart of it: fraudulent and deceptive conduct. The investigation concluded that Boeing's own employees chose, and I quote, the path of profit over candor. The technical problem centered around a piece of software called MCAS. It was designed to make the new 737 MAX handle just like the older models, which would save airlines a ton of money on pilot training. But here's the fatal flaw. It was an automated system that relied on a single sensor, a sensor that was prone to failure, and it could push the plane's nose down over and over again. And the most unbelievable part? Boeing made absolutely sure that pilots didn't even know it existed. So how did they pull that off? Well, it was a deliberate, step-by-step process of concealment. Boeing's own test pilots discovered that MCAS had been secretly changed to be way more aggressive than they'd been told. But instead of telling the FAA, which would have meant expensive new pilot training, they actively hid that fact. And because of that, the system was completely scrubbed from official FAA safety reports, and ultimately from the pilot manuals. The very people flying the plane were left completely in the dark. After that second crash, the whole web of deception just unraveled. The consequences for Boeing were immediate, and they were severe. The company's entire financial reality was about to get turned completely upside down. Just look at how fast this all happened. It's devastating. The first crash was in October 2018. Then, not even 5 months later, the second one. That was the breaking point. Just 3 days after the Ethiopian Airlines crash, regulators around the world did the unthinkable. They grounded the entire global fleet of Boeing's brand new, best-selling airplane. The first really big bill came from the Department of Justice. Boeing ended up entering what's called a deferred prosecution agreement to settle a criminal fraud charge. The price tag for that? Over $2.5 billion. But if you look closer at how that settlement was broken down, it's pretty revealing. The actual criminal penalty was, believe it or not, relatively small, less than $250 million. The vast majority of that money went to compensate the airlines and to a fund for the victims' families. You can see the DOJ's strategy here. Punish Boeing for the fraud, but try to do it without totally destroying a company that's absolutely essential to the U.S. economy. The hit to Boeing's bottom line was immediate, and it was just brutal. In 2018, before the full weight of the crisis came down, Boeing made a profit of $12 billion. Just 1 year later, that swung to a $2 billion loss. I mean, think about that. That's a $14 billion reversal in a single year. And the fallout didn't stop at Boeing's front door, not by a long shot. The grounding of the MAX sent a shock wave through the entire global aviation industry, affecting everything from tiny parts suppliers all the way up to national economies. Investor confidence just evaporated. In the year after that second crash, Boeing's stock price plunged by an incredible 71%. This wasn't just a dip, it was the complete erasure of hundreds of billions of dollars in shareholder value. The damage was just everywhere you looked. For the first time in years, their main rival, Airbus, became the world's largest plane maker. To cover all these new costs, Boeing's debt just ballooned. Key suppliers like Spirit AeroSystems, the company that makes the fuselages for the 737, they were pushed right to the financial brink. And to top it all off, airlines either canceled or put on hold over 1,000 orders for the plane. And to keep its own supply chain from completely falling apart, Boeing actually had to step in and prop it up. They had to advance their key supplier, Spirit AeroSystems, $425 million just to keep them afloat. It shows you that the cost of the crisis now included bailing out its own partners. The impact was even felt on a national level. Economists figured that the halt in 737 MAX production actually shaved as much as 0.4 percentage points off of the entire U.S. GDP in a single quarter. That's how big the economic footprint of this one manufacturing crisis really was. And the airlines, Boeing's customers, they took massive hits. And this pain has continued for years. I mean, even as recently as 2024. After that door plug blew out on a MAX 9, United reported a $200 million loss, and Alaska Airlines got $160 million in compensation from Boeing. The financial bleeding just kept on going. So this all brings us to the really crucial question. Why? Why did all of this happen? Well, investigators and industry analysts all seem to point to one thing: a deep, fundamental shift in Boeing's corporate culture. This quote from a former executive really says it all. For decades, Boeing was a company run by engineers, a place obsessed with safety and building the best possible machine. But a new philosophy took over, one that prioritized short-term profits and shareholder value above everything else. The goal became to run it like a business, not like a great engineering firm. And you can literally see the results of that philosophy in the company's spending. By 2022, Boeing's spending on research and development had fallen to just $2.6 billion. Now, for comparison, its main competitor, Airbus, spent over $1 billion more. The takeaway here is pretty clear. When a company's culture stops prioritizing engineering, it eventually stops investing in it too. Which brings us to today. After years of turmoil, Boeing is on a long and really difficult road to recovery. They're not just fighting to rebuild their balance sheet, they're fighting to rebuild something far more fragile: trust. On the financial side, yeah, there is a path forward. Analysts are projecting that and that's a big if Boeing can stabilize its production and meet all the new safety demands, it could swing from an $8 billion cash loss to a nearly $13 billion positive cash flow by 2029. But that is still years away. And so, this is the question that really remains. The financial recovery, well, that's a matter of spreadsheets, production targets, and deliveries. But the real recovery depends on something that's much, much harder to fix. Can a company that's so completely lost its way truly rebuild a culture where safety, not profit, is the #1 priority? That right there is the $80 billion question.